Hi and welcome to the Market Alert for Friday, the 12th of May 2023. So yesterday Disney was mullered, banks battered, but mega cap tech turbocharged, Mickey Monkey hammered, along with silver as well, and Pac West pummeled. The regional bank in California that's had problems of late, but that got really hammered yesterday, sending the markets lower. The second news item, risk sentiment sours on more bank woes, but Google offers respite, obviously the earnings from Google. US stocks were mostly lower as regional banking concerns resurfaced. I suppose we're going to see more of those going forward. Speaking of banks, Bank of England obviously raised rates yesterday to 4.5% in record 12th successive rise in a row. I don't know how much longer they'll continue to do this, but inflation is still obviously an issue in the UK. Economic news for today, we've got GDP for the UK. It's supposed to be flat, according to the forecast. Previous was flat, and the forecast also. We've got the prelim. That shows also the same as well. It was changed on the last one, down to 0.1. And at 3 p.m. we've got prelim consumer sentiment and inflation expectations as well. And that's just to be slightly lower, which will be bullish for the market if that is the case. Okay, let's move on. Have a look at what the markets did yesterday. We'll kick off with the Dow. So yesterday we see the Dow moving lower. But from here back to here, we see the market stopping at 78% retracement, and overnight the market moving back to the upside. No surprise given that the market came off this level yesterday, and you can see closing about a third of the way, just above, well, nearly halfway back, which indicates buying. And when we look at the intraday, we can see this. We saw the market sell off, trade all the way down to the BRN down here, which was at, let's just have a look, 33,150. And you can see the buying coming in there, you can see the green, and then they start to bring the market back at a retest at 78.89. More buying, and then the market making its way back up. Overnight, it's traded sideways, but needs to close above the daily pivot, which is the purple line there, and also the close, so a bit of resistance there at the moment. Also note that we have the 50 EMA there as well, which it will need to get through in order to continue to move higher and trade back towards yesterday's high. In the German DAX, similar picture, the market coming off the lows yesterday. Let's just have a look, see where we retraced. From here up to here, we came down to 62.78. In between there, volumes large for yesterday as well, above average, and again you can see it coming off the lows halfway back by the end of the session and starting to move up once more, with the markets currently trading above the 20 bar moving average. 30-minute chart shows the markets moving up initially, and then we have the obligatory shakeout, but of course this was okay until we got to here, and then we saw the market sell off sharply as news of Pac West regional bank started to see a massive short selling in their stock. Market trading down to the BRN there, just above the S2. That number is 15,750, and then you see the market moving off this level. Again, you see the demand coming in and the buying moving the market to the upside. When we get back to the low, note also the market coming off this as well. It goes through, tests it, and then comes back. Unlike the Dow, we're already through the DP and the averages in the 30-minute DAX. We've got the BRN here to get through, which is going to be 15,900. Then we've got the 200 MA, and then another BRN before we get to the R1 and the high of yesterday. In the 5-minute chart, a bit more of a detailed look at yesterday. You can see that it was a bit choppy to start with. We moved up, we retraced, we then moved up, and we failed to move any further. We came back down to the averages, and also what looks like a 62% retracement there. Let's just have a look. Let me just redo that and not extend it right. So Let's just have a look there. Yeah, we came back to 62%, and then we traded up to 78.89 on the upside there before we moved down to the BRN and the close. The DP as well, and market found support there, came back 50%, and then moved back down, and eventually we broke the DP again as Pac West started to trade on the electronic market. Prices then tried to come back, stuck at now the DP close and the 50 EMA and the BRN, so a lot of resistance above this point. Market then moving south before finding some support, and you'll see the markets maintain this upside response ever since, and overnight the market trading back towards that 15,900 level where we see prices currently trying to move to. So for the week so far, £775 in profit, 395 in the profit factor, and we've got 73 there to 27 on the win-loss ratio. So yeah, nice week so far. It's a short week, only 4 days this week, and then we've got today as well. Moving along to the S&P 500, markets sideways yesterday, managing to trade back up to the 62% retracement though at the moment. Still a bit of resistance there. It needs to take this out if it's to move higher. There's no major news today, so there's no reason why we can't move to the upside. Probably get a shakeout first, as that seems to be the pattern at the moment. Yesterday, you can see all was fine until, like I say, Pac West came online, and then the Dow and the cash market for the S&P. We then had a retracement up to the 200 MA. Market found resistance here along with the DP, then retested, and this retest we'll see there is a good 62-78% retracement. We see them buying in at this level, and then they bring the market back up, and you can see we're currently above all of the averages, the DP and the close as well, so fairly bullish overnight for the S&P. In the FTSE 100, also a test yesterday. We're still sideways in this market, and given that Bailey increased rates yesterday, managed to just follow the US and trade back. Resistance to the upside at the moment at these three levels, as can be seen, and also a confluence at the 62 with the 5-bar moving average and the 50 as well. In the 30-minute chart, we shot up to the previous day's high. We then saw the selling coming in as soon as the market did this, and then we sailed to the downside through the low, but we then found buying. Look at that buying bar there when they came in and bought this. This is just after the news, isn't it? There's the announcement at 12:30. The market then moved down with the Pac West short selling, and then found massive intervention there and moving back to the upside. And again, above the DP at the moment, some of the averages got a bit of resistance there. We're actually through all of the averages at the moment, looking at this in a bit more detail. Let me just spread this out and expand it a bit so that we can see. Yeah, we're currently above all of the averages and the close, but we need to get above yesterday's, or the overnight high is in the way there, and yesterday's high up at 7785 is only a matter of 30 points away there. In the GBP JPY, the market down yesterday, but we see demand there. The dollar was up strongly yesterday, so everything, pound as well, struggling against it. You can see we broke the 20-bar moving average as well, but we managed to move back overnight. So let's have a look at this in a bit more detail. Again, we see the market attempting to move up off the low yesterday, but trading up to the 50-bar moving average, finding resistance. Second attempt failed there as well. And then we saw the interest rate rise from the Bank of England and the market moving lower. We then see prices coming off the DP there, and overnight trading back to the BRN, and then trading back to the DP overnight. But we got the 50 EMA in the way there at the moment, and the news out at 7 a.m. for the UK GDP as well. In the pound, down yesterday, despite the fact that rates were raised, the dollar was stronger, which resulted in the metals selling off as well. But you can see there we've got some resistance to the upside. Need to get back above that 20-bar moving average there as well. 30-minute pound, you can see the reaction. Initially it was to the upside for the pound, But like I say, once the dollar index came online, I don't know why, but there was a big move in the dollar yesterday, and this sent the pound lower along with the metals. So have a look at the dollar. So you can see yesterday the dollar moving sharply to the upside but back down on the overnight. Still stuck in this sideways range, trading to the top side of it, having an adverse effect on the markets yesterday, particularly the metals. So just feast your eyes on this one. Silver hammered yesterday down $1.30, down to 78.89 in the fib retracements from this last swing back down to here. We've got a bit of support overnight there at the moment, but if you look at the 30-minute chart, you'll see exactly what happened. They just continued from the start of yesterday morning. As soon as we got below the previous day's close, we drove through the low, found a bit of support at 25, but that wasn't going to last, and then we just hammered the market all the way down to through the S3, but they're down to the 24, another 50 cents below that, and the market overnight just finding a bit of support at this area. Fascinating to see this happen, because if you have a look at gold, barely moved. They did move it lower, but nothing like the hammered silver yesterday. And in the 30-minute chart, you can see the gold market there moving down, and also finding a bit of support overnight at yesterday's low. So let's have a look at the gold-silver ratio. Well, you can see how this spiked up yesterday, as silver was the chosen one to be hammered to the downside. I don't know whether one of the banks is still short silver and they wanted to get out before this market breaches the $26 and moves towards 30. But they certainly took the opportunity. And if we look at the volume for yesterday, you will see that we had 112,000 contracts yesterday. Each one was 112,645, which is times 5,000 ounces per contract, is just over 562 million ounces of paper silver traded yesterday to actually crush the price of silver. If we just go back to the daily chart there. So yeah, it took 560 million ounces to actually hammer the silver price down yesterday. So it took an awful lot of effort, didn't it, to pull that one off if they did want to get out of that trade. So yeah, 112,645 times 5,000 is around 560 million ounces. So what a surprise. What a surprise. This has been going on for years. It's not unusual to see it, but it's interesting that it took so much volume to actually achieve this objective yesterday. So there we go. You can see we've had 127,000 of late, 118. You'll find these will be down days where they've got these spikes in this, because that's what they have to do if they want to make money on the downside. But it's just bizarre, isn't it, that as you look at the gold-silver ratio. So you can only have to look at this and you know that gold didn't really sell off when you see this sort of vertical move in the gold-silver ratio. So we know there's manipulation at hand once more. Okay, that will do it for this one. It's the last one of the week, so have a great weekend. Let's see what these GDP numbers are like when they come out from the UK. And I'll see you on Monday. So with that, as ever, thanks for watching. See you in the next one.